Hey guys, what's going on? Jeb here, and in today's video, I have a very interesting chart that I want to show you, showing the price of the stock market over the last 50 years as a result of inflation. I have a bold claim to make. You've actually lost money in the stock market, and the most you would have ever had in the stock market was not right now as the S&P 500 reaches new all-time highs. It was actually in 1999, and you've been losing value ever since. What am I talking about? Well, that's the topic of inflation, and we're going to be diving into it in today's video. If you do enjoy today's video, make sure to smash that like button, subscribe to the channel if you haven't already. But without much further ado, guys, let's go ahead and dive right on into it. So guys, I am on a website right now called inflationchart.com, and I have it bookmarked because it's something that I want to show you guys quite frequently. We have three lines on the screen right now. Let me start with what is the most familiar. This line right here represents the S&P 500. It represents the S&P 500 going back to January of 1970. So effectively, this is the last 51 years of price data for the S&P 500. The S&P was trading at $90 in 1970 when this data was begun being collected, all the way up to where it sits now, trading around $3,800. This has been one of the longest sustained bull markets in the history of the world, other than just a couple of major downtrends that we saw in the late 90s and also around the 2008 financial crisis. This chart has more or less been going up ever since its inception decades ago. But there's a catch, and the catch is known as inflation. Inflation, as you probably know, happens whenever the amount of a currency is increased, thereby decreasing the value of all individual units of the currency. The analogy that I use oftentimes is if you are married to someone and you give your spouse a ring, that one ring means so much because of its scarcity. But if you give your spouse 10 rings, would your spouse value each individual ring as much as they value the one? No, it's rare, and therefore the ring has value. It means something because of its scarcity. It's why if you lose a wedding ring, it means so much, and why you fight very hard to secure the value of it by not having so many of them. It just doesn't make each individual unit as valuable. It's a similar thing for our currency, and it's what we've seen happen. It can be measured like this. Looking back at this screen, I'm going to turn on a chart called the M3. The M3 is a measurement of all money in the economy, specifically measuring US dollars. I'm not going to go into how M3 is calculated. It does include a plethora of different things, including long-term savings accounts, bonds, all kinds of things. Excuse me, not bonds, but long-term savings accounts, cash equivalents, investments, certain things like that, money market accounts. It is basically a measurement of the total money supply in the market. Looking on this chart, we can see that it was sitting roughly around $500 billion in 1970, and today it sits around 20 trillion. That means we have seen a 40x increase in the amount of dollars in circulation in the economy. And in fact, ever since 2 years ago, we have seen this number jump from around $15 trillion to where it sits now of around $19 trillion. That means we have seen roughly a 25 to 30% increase in the amount of US dollars in existence ever since the beginning of what started last year, that I can't say on YouTube because I don't want my channel to get taken down. In fact, there are many economists and people in the media that believe that the amount of money printed is actually much higher than this, and it's just not being documented. We're not going to go there. We're going to stick with the conservative number of a 30% increase in just the last 2 years, and a 40x increase, 40x, not percent, 40x increase in the last 50. Now, I'm going to show you the most damning of all of these, and it is what we get when we compare the S&P 500 and adjust it, not for inflation necessarily, but for the amount of money printed and injected into the M3 supply. Looking here, this is the real chart of the S&P 500. This is the real chart of the S&P 500 as measured in M3. It is adjusting the way that the S&P 500 looks to accommodate for how much inflation has occurred, how many dollars have been put into the market. Now, I want to make one thing very clear, and that is this. The M3 supply is not the same thing as inflation. An increase in dollar supply does cause inflation, but it is not inflation. Just because the supply has doubled does not necessarily mean that the value of the dollar goes down 50%. There are a lot of factors at play, but in general, when the amount of dollars in existence goes up, the value of each individual dollar, by the rule that we said earlier, goes down. Supply and demand states whenever the supply of something goes up and the demand stays constant, then the price must go down. Now, the demand of the dollar has gone up, so it's not not quite as severe as this chart might make it look. However, it is still a very big problem, and it speaks to what I said earlier, that the most value you may have had in the S&P 500 was not today. It was actually 21 years ago. Looking back at this chart, we can see that over the last 50 years, ever since the 1970s, we have seen the S&P 500 more or less move sideways. According to this, the S&P 500 looks like it's about as valuable today as it was back in 1970. In fact, according to this chart, the value of the S&P 500 adjusted with the M3 supply of all money actually dropped below the value at its peak back in the 5th month of 1971. Back in May of 1971, the value of the S&P 500 was roughly the same that it was just about a year ago. That is a big deal. And in fact, it makes a lot of sense because we have seen an exorbitant amount of inflation over the last 100 years. Why do I talk about inflation so much, by the way? The reason I talk about inflation so much, and the reason this chart is important, is because when people are investing in their retirement and they think they're making money in the long run because they're making 8% year over year in the stock market, are they really? Most people believe that inflation is right around 2%, and it is right around 2 to 4% in a given year. The picture is not as bad as it looks on this chart. However, it is still absolutely dire, and people that are investing in their future, trying to save money for the long term, are being stolen their wealth because the money supply is being increased and the value is being taken out of our amount of dollars and put in the hands of the central banks, who are having money injected into them by the Federal Reserve. There's $120 billion of quantitative easing going on right now every single month. Those are statistics direct from the chairman of the Federal Reserve, Jerome Powell. That is $1.5 trillion a year. Notice how there's only $19 trillion in existence in this M3 money supply. We would recreate all of the US dollar money supply in just over 10 years at current rate. We're seeing an exponential increase in the amount of U.S. dollars in existence, and that is going to lead to major inflation long term. There is an argument to be made that we're going to go through a period of deflation over the next 12 months for very complicated economic reasons that I don't have time to get into in today's video. That is very much the consensus. I won't say true because these things can never be perfectly understood. But the long-term implication of this is increased inflation and increased adoption of Bitcoin. That's why this matters, and that's why we're talking about it here on the Crypto Jeb channel, is because if you are invested in the Bitcoin market, you should be very sad for our nation, but very happy for your investment, because when the U.S. dollar loses its value, and when nations like El Salvador see 30% inflation, and they don't see any of the benefits of quantitative easing like us Americans have, and they don't see the benefits of $3 trillion of stimulus like we have in the short term to bolster the economy and provide much-needed stimulus to the economy, when we start seeing nations like that leaving the U.S. dollar, it's a warning sign. It's a sign that civilization is getting tired of not having a sound money that we can store value into the future from. It's tired of being stolen from. Every single night that you sleep, your dollar loses its value. Remember 10 years ago when the $5 footlong was a thing at Subway? How much does a footlong at Subway cost now? $7.50, $8? That's what inflation looks like right there. And if you had to put $100 under your mattress 10 years ago, you would only have about $60 now because of inflation. It is the way that wealth is transferred from us, the people, to the people in charge. You want to talk about wealth inequality, that's where a lot of it comes from, right there, and Bitcoin is the solution. I encourage you, if you haven't already, to get invested, because big things are coming and you're not going to want to miss out on it, guys. I love Bitcoin. I am a big fan of Bitcoin. I'm not a Bitcoin maximalist. I love the altcoins as well, but I do think that Bitcoin can help to solve a lot of this. If you believe so also, hit that like button, subscribe to the channel, and let us know in the comment section down below. Guys, before I go, if you did enjoy this video, also make sure to sign up for Lux Algo. It is the #1 technical indicator I've ever used in my entire career. I don't say that lightly. It gives amazing signals. It called the downtrend that we've been in for the last 2 months. It called the uptrend that we started about a week ago. And if you want to get access to the leading indicator, then make sure to check out the link in the description box down below. You can get 20% off at checkout with coupon code JEB, J-E-B-B. Anyway, guys, that will do it for today's video. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.